Kenya's economy is now expected to grow at 5.4% in the year 2015, which is 1 basis point over last year's growth rate of 5.3%. The World Bank Group Economic Report released today indicates that the Kenyan economy is expected to be resilient in the face of worsening global growth.
We are still saying that Kenya is on a solid ground, that growth for 2015 will be 5.4. But should things get much worse, should the volatility in the market, should the interest rate really continue to go up, the shilling continue to fall, when the Fed takes more action, then we still see the economy still doing much better at 5.4%.
Senior economic advisor at the bank, John Randa, says that for Kenya to realize this growth, the National Treasury needs to manage the growing fiscal deficit, which has risen from 4.5% in the year 2012 to the current 8.3% of the gross domestic product. The World Bank says that retail and the agriculture sectors will lift growth this year, but the El-Nino rains may alter growth next year.
We know that what we are spending our money on is okay. It's opening the productive space of the country. The country can produce more and grow much faster and achieve the 10% growth rate. But you have to live within your means at some times.
The World Bank says that the Central Bank of Kenya needs to balance between stabilizing the money market and managing the interest spread to boost lending to the private sector. Kenya's economic growth this year is expected to be one of the highest in the world, towering the expected growth for sub-Saharan Africa, Europe and the Americas.
It was 6.7 in 2013-2014. It was 8.3 in 2014-2015. Now it is 8.7. It cannot go further. It has to start reducing at some point. That decision, whether to keep on adding more recurrent costs or adding more development spending into the budget, that decision will have to be made by the policymakers in the National Treasury.
Randa says that Kenyan shilling is likely to continue gaining more ground against the dollar as the U.S. economy starts to cool down.